Welcome back. Rajat Rajgarhia is with us, MD and CEO at Motilal Oswal Institutional Equities. Rajat, good morning. Great to have you with us here. Rajat is someone who has the pulse of what foreigners are doing, what large investors are doing here in India. Rajat, and I want to ask you exactly that, because people are all, there's only one question. The mood's changed for the better. There is no slip or any walk back on what was announced with regards to India-US in the last 24 hours. There was some concern yesterday, but nothing. So all good. The question is there going to be follow-through over the next couple of days? And is the FII, the FPI, back in a durable way?
Yeah, hi, Prashant. I think very quick response. If you look at India, I think we were an outlierish underperformer last year and the first 30 days of this calendar year. I think this deal transforms that. We have a lot of catch up to do in this whole global rally of last 15 months. This event is big enough to do that. You will see follow-up not just for a couple of days, but I think we believe the trend reversal has happened. You will see foreign flows being very strong. They sold $35 billion over the last 15 months. You will see a very large part of that money which will come back over the course of next few quarters.
$4 billion, Rajat, was sold just this year after the $30 billion last year, right? So how much, I know it's not an exact science, Rajat, but how much do you think in that sense comes back? And this is feedback you're getting. I know that you speak every day to some of the largest investors out there, and that's the feedback you're getting. People are ready to come back. Discretionary money.
Well, Prashant, if you look at the EPFR flows, the India funds have been receiving inflows every week for the last few weeks, but the market flows have been negative. I just think that a reallocation within the existing funds itself will be large. But more importantly, moving from the highest tariffed nation to the lowest tariff nation. Let the good news sink in, let corporates start planning it out, and you will start seeing some order announcements happening from the global companies to India, which had probably stopped over the course of last 1 year. This is very big news. It will play out slowly, but for surely.
Rajat, hi. So what will go up? What is likely to do better? Will it be the large liquid names, the ones where FIs can take large positions, HDFC, Reliance, some of these IT names? Or is this a time to look at mid-cap and small cap? Since there is such a discernible change in the sentiment, many of these small and mid-caps have been beaten out of shape.
Absolutely. You know, in your own channel, I think every day you get guests, someone who favors small caps, someone who favors large caps. We look at every stock on its own. I think three buckets of stocks you can think about. First, the very direct beneficiaries of this US tariff deal, but largely it will center around small caps. You can't put big money into that. I think second, big sectors which are second derivative plays. I would think lenders, financials are a very large segment of second derivative plays on this whole tariff deal. And I think third, the poor sentiment led to a lot of valuation correction in large mid-cap franchises. Some of these stocks are down 30-40% from their highs. Maybe the highs were also not justified. But post this big correction, those third bucket of large mid-cap franchises becomes more attractive.
Got that. Rajat, you also have such a strong view and on the supply which is lined up, right? That's the other point. As soon as the market starts to look healthy, there is a ready supply book on the other side. So is it, and it's a very large pipeline. So very quickly it'll realign, right? Let's hit it now. What's your sense?
Look, the pipeline is very large of IPOs, QIPs, secondary market blocks. And if markets go up, you will see a lot of these pipeline getting activated. Already in the last 2 days, I think you are seeing IPO launches with firm timelines being announced. I can already see 3 to 4 IPOs being firmly launched up for the next couple of weeks. A lot more are going to come. But, you know, the important thing is the markets will align both on supply and demand on this. You are not just going to see a frenzy activity. You will see good quality paper, reasonable prices, and maybe curved sizes before you start seeing large-scale foreign flows. As I mentioned, the intensity of foreign flows will decide how big a pipeline will get built, because FII flows would need liquidity, and for best is to match through a lot of the primary market supply.
Yeah. You began by saying trend has changed for the better, right? I mean, it's so downside kind of now is protected, that 24,500 kind of levels, and upside, I mean, we'll have to see depending on supply and where that matching happens, Rajat. Is that a fair way to paraphrase what you said?
Yeah, I think downside is protected, but please note three more things. While we put a lot of focus on the budget in this government, you have been seeing budget announcements
Through the course of the year, yes.
Reform announcements continuing throughout the year, right from the government to the RBI.
Absolutely.
A lot of other regulators. But they kind of got sidelined because of this tariff wars and the FII selling.
Yes.
Once you have clarity on these two,
Yes.
I think the intensity of stock reacting to good news will be a lot more today than what you saw in the prevailing 12 months. So I think, if the markets keeps touching 26,000 Nifty every 6 months, it's not the same valuation. We have been stuck in this range for last 15, 17 months. We will decisively break this if these trends persist.
Rajat, it's such a useful conversation, punchy, short conversation, and we'll have you back, request you back on soon again. Thank you very much for that perspective and what you're picking up here and now. Let's